Hi guys, welcome to CNBC TV 18 Earnings Corner. I'm Anisha Jain. Well, after Wipro managed to disappoint when it comes to the Q4 revenue as well as margin performance, all eyes have actually turned to TCS. And while TCS has more diversified book as well as better balance sheet, nobody is immune from COVID-19 impact, and that is why the analysts are expecting a weak quarter to come by from TCS as well. Now, as far as the dollar revenue is concerned, we're expecting it to remain flat quarter on quarter, and that would mean that the number will come in closer to $5,580 million. Apart from that, the rupee revenue is expected to jump up by around 1.5% on account of the rupee depreciation that we have seen in the quarter gone by. EBIT as well is expected to remain flat quarter on quarter, closer to 25% mark. But don't be surprised if the EBIT margins even fall closer to 24.5% mark, because the analysts on the street have a range of anywhere between 24.5 to 25 as far as margin is concerned, and they talk about how going forward the margins will come in under pressure, so that is the key number to track. Apart from that, the profit is expected to jump up by around 1%. Now, as far as the constant currency is concerned, we are working with a growth of around 0.5% in this quarter on a sequential basis. But if we look at the annual figure, the constant currency is expected to be around 5% this quarter, and that would mean that the constant currency growth on a YOY basis has slowed for the last 4 or 5 quarters. Now, remember, just at the start of the year, the constant currency on an annual basis was close to around 12.5%, and now it has slowed all the way to 5%, and going forward, it's just going to get worse given the COVID-19 impact. Even if you look at the full year constant currency number, that is expected to come in closer to 7 to 8%, and that can be again disappointing, because remember, at the start of the year, people were talking about a double-digit growth to come by from the likes of TCS and Infosys, so this is something that will be disappointing. Apart from that, remember, Wipro also mentioned that on account of COVID-19 lockdowns, they saw a negative impact to the tune of 0.7 to 0.8% on their top line, and analysts believe for TCS as well, there might be a negative impact from 100 basis points as far as top line is concerned. Margins, as I said, will largely remain flat. There is a tailwind of rupee depreciation, but on the other side, the constant currency headwinds are there, as well as the billings have been on the lower side. The other income will be on the lower end as well, and that is why we are looking at a PAT growth of just 1%. Other than that, the key thing to watch out for TCS is, of course, the deal wins, and that momentum has been really, really strong for the company. In fact, in the quarter gone by, we had seen deal wins to the tune of $6 billion, and this quarter as well, it is expected that the momentum will be strong, because in the first half of the quarter, there was these couple of big deals that the company signed, both with Walgreens to the tune of $1.5 billion and with Phoenix to the tune of $2 billion, and that is what will support the deal win momentum in this quarter. However, the key thing to track there will be whether this momentum is sustained in the coming quarters or not, because the feedback that we are getting from corporates as well as the analysts suggests that this quarter there have been no discussions whatsoever as far as new deals is concerned, and the deal pipeline is also looking a tad bit weak. Apart from that, the management commentary on the IT budgets as well as demand scenario across various verticals is something to watch out for. BFSI would be key. Remember, BFSI forms around 30-35% of companies' revenue, and even before COVID-19 came into picture, BFSI sector for TCS was actually slowing down. So this is important to track. Apart from that, we'll also watch out for retail sector. Remember, TCS has been missing the revenue estimates for the last 3 quarters, so expectations are as it is muted. Apart from that, we'll watch out for the margin and balance sheet impact, whether the clients are asking for more discounts, whether they're asking for delayed payments, etc. There are a lot of employees issues also to watch out for. What are they doing about new hires, as well as any increment for the employees, the working from home situation, as well as the H1B issue has also cropped up in recent times. So that is something to keep on your radar.